All right. Today we had FOMC and the bulls ripped right through that resistance level, so we now have the weekly higher high in SPY. So first up, let's take a look at this weekly chart of SPY. So let's crack open this chart and see what's going on in the stock market today. All right. So today in SPY, we did get that weekly breakout, which was that critical resistance at SPY 407. Now with the weekly higher high, we need to hold above this level by the close on Friday because this is a weekly chart. But you'll see when we get to the daily chart, this is still a very bullish breakout. Now don't be upset if you missed the rally. It is not always easy to see these things coming, but it is important to remember that sometimes you need to be bullish when everybody and their mother is bearish. But even if you're not sure, you can always follow price action and stay objective when you do see those bull breakouts. But even once you get the breakout, sometimes it's not as obvious to know it's going to be a face ripper. But it's important if you're staying objective to still stay bullish when the chart tells you to. All right. So jumping over to the daily chart of SPY, you can see today we did get that bull breakout on increasing volume as we did short squeeze the short sellers through that resistance at SPY 408. And you can see how very quickly we hit the next price target higher just below 414. So while SPY is above 408, we need to be looking for the next targets higher at 414 and then the gap close at 421. And yes, we do have much higher prices, but we'll take it day by day. Now, while we did get a breakout on increasing volume, it's important to remember a lot of that was just short squeezing. So it will not be surprising if the market wants to backtest that breakout and prove there are going to be buyers at that breakout level. So if you did miss this breakout, your next opportunity to buy into this bull trend is going to be right around SPY 407 to 408. Below that, we have the support trend line down here right around 402. And then of course we have the critical support at 400 and then 398. And as you can tell, all of these moving averages are crossing over, and you're going to be hearing a lot of talk about the golden cross of the 50 moving average crossing back over the 200. So without a doubt, the bulls are driving this market. Whether you like it or not, or whether you agree with it or not, is completely irrelevant because we are following what the chart is telling us. And the market could not care less about your opinions, and the market could not care less about my opinions. That is why we follow the price action and the trend, and right now that is still bullish. On the NASDAQ 100 triple Qs, we were up 2.14%, and again we had the bull breakout above that critical resistance at 294, which means we are very likely well on our way to closing that gap at 308, and as you can tell, we were well on our way within doing that with today's price action, but we simply ran out of time. So just like with SPY, there is going to be the possibility we backtest this breakout and the support trend line, which is going to be a critical support level on the triple Qs at 294, and the critical upside resistance will be this gap fill at 308, and then the resistance between 310 and 311. If we lose the support at 294, we still have very critical support down here right around 290 and the gap fill at 288. And again, all of these moving averages are crossing over to support the buyers as we develop the bull trends. On the Dow Jones, we were up 0.01%, so we went absolutely nowhere. But again, this all happened on very high volume. So as you can tell, there is a lot of resistance in this flag right here at the resistance at 341, which does tell me there is going to be the possibility we do revisit the bottom of the flag right around 332. If we get the bull breakout above 341, we still have strong resistance at 343 and 346, and above that we have the price target at 350. Downside support levels will be 337, the bottom of the flag at 332, and then the critical support down here at 327. On the Russell 2000 IWM ETF, we were up 1.57% today after we had the confirmation of that bull breakout with yesterday's bullish candle on increasing volume, and we're well on our way to the next price targets higher at 195 to 197. Above these levels, we can run all the way back up into the 200s, which does take us into the 220s. So you are staying bullish in the small caps as long as we're above this breakout level at 188, and there will be another support level right around 190. If we lose 188, we have strong support down here right around 185 and 182, and as you can tell, this is a very bullish breakout to another daily higher high. On the ARKK ETF, we were up 4.41% today, and we did get the bull breakout above the negatively sloping 200 daily moving average, which means ARKK could be heading all the way back up just under $46, which is a long ways to go from here. So in the ARKK ETF, you can stay bullish above the breakout at $40, and if we lose the breakout level of $40, we do have strong support down here right around 38. On the VIX, we were down nearly 8% today, and the VIX did something it has not done in a very long while, which is crushing all the way down below 18. So I continue to tell you the VIX below 20, and especially the VIX below 18, is more indicative to a low fear market that you see in a bull trend. If you continue to doubt that we are in a bull trend and heading into a bull market, you are ignoring every signal and you are not being objective, because right now the VIX is telling us there is no fear and we're heading into a bull trend. On the contrary, you can get more bearish and cautious if the VIX does indeed spike out above 20, but so far we just have not seen that. On Bitcoin, we're currently up about 2.5%, trading just under 24,000 as we're coming into the previous daily high of resistance around 23,750. Above that, we have 24,460 and 25,000, and you're staying bullish as long as we're above the breakout level, which is all the way down here at 22,410. On Amazon, we were up 1.96% as Amazon now has the third day in a row back over 102, and we do have earnings coming up around the corner, which means we are very likely going to fill the gap at 110, which is also going to be resistance at that negatively sloping 200 daily moving average. Stay bullish above 102, and if we lose support at 102, we have strong support at 98 and 93.5. On Microsoft stock, we were up 1.99% as Microsoft is getting that strong bounce off of the critical support at 242. We cleared our price target at 252, and we did hit our price target at 255. So from here, we need to clear above 255 to hit our next target, which is going to be the gap fill at 265. If we lose the support at 252 or the support at 242, you can get a lot more cautious, and we'll still have strong support down here right around 238 and 232. On Nvidia stock, we were up 7.2% today as the semiconductors continue to do very well, and we did see Nvidia getting that very strong bounce off of the breakout level of support at 192 with our next upside price target at 213. As long as we're above 192, stay bullish because we could run all the way back into the 220s and the 230s if we break resistance at 213. On Tesla stock, we were up 4.73% today as Tesla is at the very critical resistance at 183, and I did tell you I think there's a good chance we build a flag between 183 and 155 over the coming weeks. I'm instantly wrong if we break 183 because then we are obviously heading to 196, but do keep in mind this is a very strong resistance that I do think you should respect, and you're only getting bullish for 196 if we can cleanly break above 183. On Apple stock, we were up 0.79% as Apple is right back up to this critical resistance zone between 146 and 148. Above that, we can go to 150 and 156, and we do have earnings after the bell, so you can stay bullish as long as we continue to close above 141. On the financial sector, we went absolutely nowhere today, and we did still have the bullish price action with the bull trend. The industrials were up 0.73% today, price action still above all of these moving averages, and we still do have the bull trend. The healthcare sector was up 0.47% today, but still finding a ton of resistance right here at 134. A rejection from here does send us back down to 131. The energy sector was down 1.97% today, and it's starting to lose the support at 88.6, but it's still trading above the 50 EMA. We need to hold above 88, otherwise we could be coming all the way back down towards 82. So jumping back over to the SP 500, as you can tell, we are getting the bull breakouts, especially on the weekly chart, which does tell us we are heading into a bull market trend, and you can tell the VIX is heading much lower. With a low VIX and a strong bull trend, you have to be a fool to continue to short this market. So if you cannot help yourself and you have to short this market, make sure you are managing your risk very tightly at the critical resistance levels that I continue to give you. If you hold short in a bull trend, you're going to lose a lot of money because there's no telling how long this trend's going to last for, and it's a fool's game trying to call a top in a bull trend, so just ride the wave and wait until we lose support, and then you can short like the wind as we lose support and head lower, but as long as we're in this bull trend, that does mean we are likely going higher. Also, don't forget I have my own trade alert service called Bank Trade Alerts that only trades the ETFs TQQQ and SQQQ and sends you all of your buy and sell alerts directly via email and text message. If you want to learn more about Bank or want to learn how to subscribe, you can find out more information by clicking on the link in the description of this video. If you want access to all of my intraday updates and analysis, come join us over at the Stocks Channel Trading Discord community, and you can find out how to join the Stocks Channel Discord by clicking on the link below. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.